Okay, we just made a video about Nikola Corporation and how I was able to take a $1,000 profit from that trade in just 8 trading days. Go ahead and take a look at this. If you look at my profits taken, the second biggest profit we've had so far was that Nikola trade. And now this leads me to my second position. Now this is not Nikola, but this is another electric vehicle company, and it is one that is one of the hottest stocks on the market right now, and that is Lucid Motors. Go ahead and take a look at this. This is LCID stock, Lucid Motors stock, and this is a company that, in my opinion, has gone way past its intrinsic value. Let me start off by saying, have you ever heard the saying, what comes up must come down? Well, this is one of the beliefs that I have here with Lucid. Now, I shorted 200 shares at an average price of $52.50, making it a $10,500 short position. Now, if you look at this rapid movement up, this stock was previously trading and it found some support around the $20 range. And then recently, it has skyrocketed further and further, going 2.5 times higher, and now we're approaching $55 a share plus, and this is why I decided to short it. Now, if we go to my closed positions here, you look that I see I already have a transaction with Lucid right here. I took $272 worth of profit, and here's what I'm planning on doing with my investment. I'm going to continue to hold these 200 shares of short and continue to sell covered puts against the position. So right here you see a Lucid put, $47. So here's the contract that I currently signed. I have 200 shares of Lucid Motors at a $47 strike price expiring next week. Now that is exactly what this was. I made an agreement to sell those shares, or I should say buy back those shares, at $274 worth of profit at an average price of $50. I lowered the strike price down to $47. If this executes, this means that the stock will have to be at $47 a share or lower by Friday by the time that you're watching this. I'm filming this a couple days early. Now, if this executes, I'll be taking $1,100 worth of pure profit plus the options contract, which if you look at my mouse right here is $266 worth. So we've already taken $274 worth of profit, and we're looking at taking $266. And if, the key word there is if it's able to get to 47 by next week, by Friday, November 26th, then I will profit in total about $1,500 in just a matter of about 2 weeks. Now, will this happen? Who knows? This is definitely a trader stock, but I want to run some quick numbers real quick to show you how overvalued this company really is, in my opinion. If you haven't checked it out down below, check out the description for referrals for Yada savings accounts, credit card referrals, M1 Finance, and all that good stuff down below. Now, this is the investor presentation that they came up with in July of this year. Now, I'm going to slowly scroll through, and as I'm talking real quick, you can pause the video on any of these pictures or any of these slides if you want to read anything about the company which you may find helpful. Now, basically, Lucid Motors is a SPAC. It is a SPAC that went public on the markets last year in 2020 during the big boom when many other SPACs were hitting the public markets, including a few that I've invested in myself, such as Tattooed Chef. Now, it was originally Churchill Capital, and that's why you see that on the bottom slides, but basically they're looking at tackling the premium electric vehicle market. Now, I know when people think electric vehicles, their mind typically goes toward Tesla, but Tesla is mainly going to focus on the average everyday consumer. People that are middle and middle-high income can pretty much all afford a Tesla. If you have a combined household income of, say, $100,000 a year, you can probably afford a new or fairly used Tesla pretty easily. But this is not focused as your everyday person affording a Lucid Motor company. This is a product that will be specifically tailored to high-income individuals. You can see the premium features that this vehicle offers. It is unlike any other. And if you look at all the premium products that are out there on the market for electric vehicles, in my opinion, there's really not one out there that can really compare with Lucid. It is definitely a luxury vehicle, and I think that they have some awesome products. They have some great opportunities moving forward. And the TAM, the total addressable market for these electric vehicles, are absolutely massive, and it's expected to grow at a compounded annual growth rate well into the double digits, and I believe there's actually a slide coming up about that here in just a minute. But between everything with autopilot, with extremely high fast acceleration, top speeds, all types of luxury products and models inside the vehicles, all this will be included, and I think this sets up this company for a great deal of success at potentially sells millions and millions of these vehicles over the next couple years. And I think that 5, 10, 15 years from now, I think that this will likely, other than Tesla, be one of the few electric vehicle winners out there that's just a pure EV play that strictly thrives off of fundamentals and not so much off of hype or just investor speculation, or what Kevin would call hopium. Now I want to stop right here. You can see, like I said, the luxury vehicle market is expected to grow about a 5% CAGR, so that's what it was. But I want to stop here and I want to fast forward to the numbers. You know me, I like the numbers. I'm not so much focused on hope or excitement. I want to focus on the numbers. And I want to run projections here based off the market cap that where Lucid is at today versus its future projected revenue and earnings. So let's go ahead and start here. It's projected 5 years out, because we can't look at numbers that are today in 2021 or 2022. Because if we're looking at that, it's garbage. This company is a startup. They're just now building out their brand, just now building out their company. But if we look at 5 years out, this will give you an idea of what this company is projecting based off of their own estimates. Now in 2026, they're projected to do $22.7 billion. And this compares to the company's current market cap at about 90 billion. So I want to go to my calculator here and I want to take 90 billion and divide by the projected revenue of 22.7 billion. 22.75 billion. That gives this company a forward price to sales off of 2026 numbers, 5 years out, of 4. Not anything that's massive, but it's not necessarily cheap either. And when you're considering that these numbers are 5 years away, there's a lot of uncertainty that can happen in 5 years. And you also have to factor in the opportunity cost of having your money invested elsewhere, and also the factor of interest rates and the value of money. You get all that and inflation and all that good stuff. But 4 is the price of sales for the 2026 numbers based off of where the market cap is at today at roughly $55 a share. Now, if we scroll down here and I want to talk about the EBITDA and the gross profits and the free cash flow, the profitability for this company, if you notice something in terms of its EBITDA, which is not even pure net income, that's obviously earnings before interest, taxes, depreciation, and amortization, for those of you that don't know, they're not even expected to be EBITDA profitable until 2024. Now, that is still 3 full years away, and also their free cash flow is not even expected to do a tiny positive number until 2025. But let's go ahead and just run the numbers just as an idea of gross profit. If you take 90 billion in terms of gross profit and divide it by the estimated 5.28, they have a forward multiple of their value of market cap times their 2026 estimated gross profit of 17. Now remember, gross profit is not net income. Net income will be much smaller than gross profit because it is only basing it off the gross margins and not off of the profit margins, which will make these numbers a lot lower. Now, if we look at other things such as like EBITDA, if you take 90 billion, okay, and you divide it by the projected EBITDA, it is 2.89. Their projected EBITDA for 2026 is a 31.1. Keep on going further, their free cash flow, which is really starting to get small, and this is where you find real profitability, not so much EBITDA and gross profit, you know, the accounting metrics that makes things look great when they're really not. If you take 90 billion and divide by their 1.51 billion projected in 2026, it is 60 times, which is a generous, an extremely generous multiple. Now I want to go ahead and mention right here, now everything I just went over is in 2026. For any company that you're investing in, if they're not profitable, you have to factor in the time value of money. Every day that your money sits in a savings account, it loses a couple percent a year to inflation. The same thing for these companies that are not profitable. The further and further out you have to go into their profits, you have to factor inflation. You have to discount that value into the future, especially at a time when interest rates are expected to rise. But long story short, if this was all too advanced for you, if you don't really understand all these multiples and all these forward estimates, just basically look at it this way. This is a basic, simple, elementary way of describing it. Lucid Motors is right now in their very, very early building out stage. They have a few $1 billion on hand, and that's going to give them a big head start towards the success of the company. But for me as an investor, the success of the company is important, but right now as a short-term trade, I'm only looking at the stock price and the future valuation, which based off of where it's at right now is so incredibly high. I think that this company has a great future, some great potential, and I think it offers a lot of value. Say, if you look right here, I think if we were to take this company and discount it down to $20 a share or less, it would be really interesting. Especially if this company were to start going to, like, say, the 15 range or below. That's when I would be really interested in buying something like a Lucid Motors, because it would start to probably offer a lot of value. It'd be a high risk, high reward play, but it could definitely have some potential. But that said, I'm looking at shorting Lucid Motors shares, receiving some nice premium in the meantime. Obviously, shorting shares does carry some big risk, but I think the odds are heavily in my favor. I think the odds that I end up closing this position for a profit versus closing this position for a loss, I would put it at, say, 80-85%. There's always risk. I always have a chance of losing a couple thousand, but honestly, it's probably closer to 85-90%. But that said, stay tuned. I'll give you guys updates as to whether or not this turns out profitable or not. I'm filming this video on the 21st, and it should be getting released on the 26th. And so if you're watching this now, if it's under $47 a share and that's where it finishes out on the week, then know that I closed out for a big profit. And if it finished way higher than I'm filming this video now at 55, if it's $60, $70, $80 a share, then know I probably took a big loss, or I'll still be holding on to my position. Go ahead and check out the stuff down below in the description. Just like I mentioned, get up to $50 for getting signed up with the One Finance. But other than that, guys, thank you guys so much for watching, and I'll catch you guys next time.